All right, folks, you got Harrington here. All right, thank you, first of all, for checking out my last episode, which was me speaking Spanish. I got a lot of feedback on that. If you guys like it, I'll do more of them. So, thanks for the feedback. Now, that said, it wasn't all positive feedback. Actually, the biggest gripe I got was from the Spaniards. They're saying, what are you doing in that crappy little room? That's not Spain. That's not Galicia. You're misrepresenting us. Well, that's probably true. So let's try something new. I don't know how well this is going to work, but, this is, I'm giving you a little view. This is Galicia. It's in an area called Rías Baixas, and in particular, the town is Ribeira. But I do want to stick on the topic of Spain. Recall we were talking about visas or possible ways to become a citizen of Spain, and we were focusing on the good things, like this, for example. But hey, let's be fair. There is a flip side to that conversation, and that's what we're going to get into today. Here we go. Our Practice Makes Perfect is the podcast for business owners and real estate investors, siempre con un cariño especial para los clientes extranjeros. This is part one. Okay, Spain is lovely. Who's going to gripe about that back there? It's a little bit cheaper generally. The food is great. The booze is cheap. All good, right? Well, it's also true, however, that Spain is a socialist country. Remember, we're here in Europe. So what does that usually mean? We'd probably say it together. Higher taxes. I have a feeling I lost a bunch of you right there. You're like, higher what? Huh? Maybe I'm okay right where I am. First of all, I hear you. Let's not rush into moving ourselves into a worse situation, right? Let's be smart about this. But maybe if we are smart about this, maybe there's a way we can have the best of both worlds. Anyway, you should at least hear my rap. Part two. Okay, let's run down some numbers. First of all, both the U.S. and Spain have federal taxation on a progressive system. So that means depending upon the amount of income, the percentage of taxes that you pay will vary accordingly. Obviously, we're not going to run down every tax bracket, but let's just take the high end for comparison purposes. In the United States, at a personal level, your personal income tax that you pay, the highest rate is 37%. It tops out there. In Spain, however, it tops out at 50%. How about corporate taxation? Well, in the United States, it's 21%, and in Spain, it's 25%. And then for you real estate investors, let's talk about capital gains. You're used to 20% is probably the figure that you're used to. Here in Spain, they do the capital gains also on a progressive system. So it can go all the way up to 28%, depending. Two other noteworthy items. In the United States, there is no wealth tax. In Spain, there is a wealth tax. And the same is true for inheritance or gift tax. None in the U.S., currently at least, but in Spain, yes, they do have taxation on those items. So, yes, as you might guess, the taxation here in Spain is significantly higher than what we're used to in the United States, and in particular for the wealthy. Get hit harder here than they do in the United States. Now, there's a lot to be said, of course, as to whether the net benefit of paying those high taxes outweighs, the extra money that comes out of your pocket or out of your paycheck. For example, here in Spain, the healthcare is free. Pharmaceuticals are very inexpensive. College is free. Etc. So bear that in mind, but that's not really what we're about here today. What we're about here today is trying to get the best of both worlds. Now, going back to our previous two episodes, we've talked about a few different ways that you could end up here in Spain, and one of them is as a retiree, in which case, the level of taxation is not really an issue for you. So I think what I want to do is I want to focus on that one particular, what I think is a particularly interesting visa, which is the digital nomad visa, where, you have your job abroad, probably in the US or in South America or wherever. You live here and you work remotely, and it's just a great visa. So now let's get down to meat and bones here. The question is, what level of income are you going to expose to Spanish taxation? Just like the United States, and most countries for that matter, Spain has worldwide taxation. So you need to be very careful. Now, at what point do you open yourself up to the Spanish taxing authority? It's called Hacienda. Well, like in most countries, it's about 6 months. I think it's technically like 6 months and 2 days or something like that. But let's go with 6 months. And that's generally the case internationally. And of course, we're talking about ways for you to live here on a more or less permanent basis. So you probably will get into, you're going to pass that threshold and potentially expose your income, your worldwide income, to Spanish taxation, which is going to be at a higher level than what you're used to. Two things about that. First of all, be aware that there's no double taxation. Between Spain and the US, there's a treaty, as there are among most countries, whereby you're going to pay your US tax if you're having to pay it anyway. You'll pay that. And then Spain will kick in, but they're not going to recharge you the full amount of the tax. They're just going to charge you that difference because they're higher. The converse is also true while we're on the topic. If you are living in a country that has lower taxation than the United States, but you're taxed in the US, then you would have to pay that difference to the US government. So essentially, whichever country has a higher level of taxation, you're going to end up paying that amount. Now, the question is there anything we can do about that? Is there maybe some tax planning that we could put in place before we make the big move? Well, yes, there is. And we're not going to go into the details here because these conversations are better had in confidential consultations, but I will give you a little teaser. How about this? Remember, we're talking about two different countries, each of which has their own laws and each of which has their own jurisdiction, meaning Spain has no authority over you and their laws have no binding effect on you in terms of your United States asset. Well, the laws of Spain only apply to Spaniards and people within the borders of Spain, and the same thing is true about the United States, and they don't cross over, at least not very much. So that gives us a little bit of wiggle room, and it opens the door to some planning. If you'll think back to our videos about trust and how we remove assets from your estate, that'll give you some idea of how the gamesmanship works. And let's just leave it at that. And then let me not forget to hasten to add here. Remember, as I said in the last couple of videos, I'm not a Spanish attorney. So ultimately, you won't be having these conversations with me, at least as far as the Spain side of it goes. My part will be your planning on the US side of it. But do give us a ring because we have an office here and I have Spanish attorneys who are very familiar with these visas and with these strategies, and we'll be able to talk you through it. As far as we go with this one, hope you enjoyed the view, and I will see you guys. Well, first of all, do the honorable thing down here, guys. Come on now. Give me some comments. Give me some likes. I don't have a subscribe button, do I? But, throw a brother about. And I will see you guys next week.